From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 25th, 2018. Today we're looking at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. We can see clearly here on the daily time frame the trend has been up for quite some time. We're going all the way back to the bottom of the chart back in March. We started all the way down there into the mid 104s. 104.65 is the low point on the chart. It's been going up ever since. We did see a little bit of a pullback in the middle of the trend, right about right here where this red trend line is. You saw a little bit of a pullback down towards the 100 period simple moving average, and then started the next leg of the uptrend. So pretty significant rising trend here for the US yen. Recently, in the past week or so, we've seen a pullback here for the US yen. As the US dollar has pulled back down, we see the US yen pulling back against the rising trend as well. Again, it's nothing really new. We've seen that before back here where the red trend line is in the middle of the trend. So just because it's been going down for a week or so doesn't mean the trend has completely changed. It means there could be a trend change, but it could simply be a pullback, a correction before turning back higher again, just like it did back here on the left-hand side. So we need to be watchful for that. The trend, I believe, is still up. There's some significant points of interest here. Really, you look at the orange shaded area right smack in the middle of the chart, again back where the red trend line is, resistance, and the market turned around and went back down. Here it is again here in the middle of the page, the chart, where the market found resistance and turned around and went down for a period of time. We can see right here in the right to the right of that, we see the similar situation where we saw resistance back to the pink zone before finally breaking and making the new high here for the yen. So three instances around this orange zone, 110.70, 110.95, where it found resistance, resistance, resistance. The reason I point that out is this becomes a significant decision point, decision zone for the US yen, for the market. We have found resistance here, resistance here, resistance here, and now we look for it to become support. And if you look at the past 2 days, we have seen Monday and Tuesday finding support right around this orange shaded area. So what we're looking for is a continuation of that. We're looking for resistance to become support. That's the typical mode of operation for the market. Not only do we have that historical resistance becoming support, we have the trend line that comes into that zone as well. I've taken a couple of Fibonacci retracement measurements here as well, right here from the last low where the blue trend line touches, and I'll put a black X there right above the yellow zone, right there where the blue shaded area is in the blue trend line. You can see that support there. I put Fibonacci from there to the highest high. I also took Fibonacci from the next little support zone, which is there at the pink shaded area, to the highest high. So both of these black X's to the top, we find some Fibonacci overlapping right here. By the way, the 618 of the longer range sits right there inside the orange shaded area. So we know there's Fibonacci here, we know there's the trend line here, we know there's historical resistance becoming support here. All of that gives us some confidence, at least a higher expectation, that we're going to look for this support to be a strong area of support and potential that it could turn the market back up again if the support remains strong enough, if the buyers are resilient enough here into this orange shade area. The risk here, of course, is that it breaks the orange zone and reverses the trend and goes lower. Pink zone, blue zone, yellow zone on the way down. So again, it's all about the orange shaded area today. Zooming in one more time, if we're looking for an opportunity to trade the US yen, it doesn't make much sense to go short here. The past 2 days have found support. There's no reason to expect to break that support, so there's no reason to go short here on top of 110.95. We're only maybe 8-9 pips away from it right now, so that wouldn't make sense at all. But what we could be looking for is support and a bounce back higher again, just like what we've seen for the past 2 days. So I have a pending buy order sitting at 110.95. It's been sitting there since yesterday, waiting to see if the market will take us in, bounce off, go back to the green zone as our first resistance on the way back up. If it can break through there and continue the rising move and go back to the uptrend, we'll look for the blue zone or higher. And eventually, we may even see it challenge the highest highs into the 113 level once again for the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.